I'm here with Nils Anden, Interim CEO, and Patrick Kortman, Interim CFO. The quote for this report is, "We reiterate our underlying EBITDA guidance for the full year 2023 of at least 200 million pounds and anticipate for full year 2024 underlying EBITDA to reach 250 million pounds." Nils, we are going to discuss the Q3 performance shortly, but I'm thinking let's start with what many probably have been waiting for the most, the ongoing strategic review and the update that you announced today.
Yes, thank you. Yes, so we have announced an interim update of the strategic review. It is continuing, and we are looking at select options to further increase shareholder value. But what we have announced today as a interim update is predominantly 3 actions. The first one is that we will exit our North American operations by Q2 next year, of course pending regulatory process. The second one is a far-reaching cost optimization program across the group that will result in a gross saving, in annualized gross savings of around 40 million pounds. And the last one is an increased focus on our core markets with resource allocations from North America and across the group to ensure that we can accelerate our growth and continue to take market shares in our core markets.
And the growth that you aim at in the core markets, we will achieve through certain initiatives that are being taken. Which ones would you like to highlight?
So we've already this year looked at a number of initiatives to accelerate growth in our core markets, but I think the ones that we really like to highlight and focus on is ultimately around particularly the casino vertical, where we see great opportunity, both in terms of brand extensions, but also a continued focus on exclusive games and enhanced product features. The second one is around the optimization of our profitable customer segments and an increase in marketing investments in absolute terms for next year into our core market segments. Ultimately, it's about providing the absolute best customer experience for all our customers, but we're very excited about being able to reallocate not only marketing investments, but also tech resources and resources across the group to drive this growth for next year.
And Patrick, these are decisive actions that Kindred is taking. What financial impact can we expect from these actions?
So what we mentioned today was a total gross or annualized gross impact of 40 million on both OPEX and CAPEX. And that's obviously, some of that will be reinvested back into the business. We'll move roles to low-cost countries, and we're also going to invest in certain growth initiatives, as Nils was alluding to. North America is part of this 40 million gross number. I think it's worth highlighting that North America, if you look at the last 3 quarters, the underlying EBITDA loss from North America has been around 17 million. And if you look on the last 12 months basis, the OPEX in North America is around 10 million. That around 10 million is part of the 40 million. With reduced, when the marketing spend, when we stop doing marketing spend in North America, some of that marketing spend will obviously go into a core market to drive growth. Okay, then coming to the effects, we also mentioned today that for next year, we expect our OPEX base to be at around 245 million.
Yeah.
And we expect then further savings coming through in 2025. So we're actually expecting to be lower in OPEX in 2025 than 24.
It's very interesting to hear. And if we move over to having a look at the operational performance in Q3, Nils, what would you like to highlight when it comes to the report?
I think there's a number of things. First and foremost, we're very pleased to see that our active customer base is continuing to grow, and we increased that base by 7% compared to last year. Additionally, it's very nice to see that our casino performance is continuing on a strong trajectory, where we delivered 11% growth in the casino segment. This was partly offset by a softer sportsbook schedule and margin in Q3 that of course impacted our revenues. And lastly, it's very promising and encouraging to see that we have regained our number one market position in Netherlands, and that we are continuing to show above market growth in the UK. And these are our two largest markets, so very promising for next year as well.
Yeah, and then actually in the UK we reached our all-time high market share number now in Q3, so we are very pleased with that.
And the UK market was one important driver between the casino vertical performance this year, this quarter. And as you were alluding to, the sports betting activity and margin was a bit to the weaker side. Patrick, can you talk about this a little bit?
About the sportsbook margin?
The margin, and also perhaps a bit about the scheduling and activity.
Yeah, so if you compare Q3 this year versus Q3 last year, last year the season started for the leagues earlier to give room for the World Cup, whereas this year we had a more normal scheduling, and a year like this when there's not a big championship, it was a fairly empty summer period from an events perspective, and then the league started in mid-August and has been a little bit on and off with also the international weeks that we have had during this. So with that we have seen actually in top league football a 16% reduction in fixtures versus last year. Now coming to the margin, we started off the quarter, and I'm talking about Q3, with a very high margin. And so that was for the first, and when we gave the trading update in July, we had 11% sports betting margin approximately. Now ending off the quarter with 9.4 obviously means that we had a very weak margin in the second half of the quarter. And that, if you now take into the trading update period, we have actually had since August up until the end of October, sports betting margins have been well below the long-term average.
Yes, and that brings us into the fourth quarter, and we're already 2/3 into this quarter, looking at a more busy December. But what are your expectations going forward? We've also heard a lot about the strategic review update. What are your expectations for this quarter and for the next year?
So I think this quarter is a very busy quarter for us. In particularly December is jam-packed with fixtures. If we look at performance to date in the quarter, October had a range of very customer-friendly results, which resulted in one of the lowest margins I've seen. However, we really bounced back in November, and we've seen a very good margin in November. And feel very confident about the outlook, given how busy December is from a sports schedule, but also from the fact that December is usually the busiest period also in the casino segment of the year. If we look across 2024, I have very positive outlook, in particular on the sportsbook segment, given that it's a very busy year. We have both the Euros taking place in Germany and the Olympics next year. So next year is going to be a busy year, and very promising outlook for sportsbook and also for iGaming.
It will be a very interesting journey to follow, Kindred, on this one. Thank you all very much for your time, and thank you, Nils, and thank you, Patrick.
Thank you.
Thank you.
Thank you.